Welcome to StockMarketFunding.com. Some of the key things that are happening this morning is that since yesterday's close, there's been several additional important news items related. Google had great earnings, in my view, meaning that when you look year over year and down to the value of the company, it certainly is there. The key metrics at SMF is looking at how they added those employees there, which had driven up their cost and part of acquisitions and things like that. As far as headed for mobile search and pioneering that way forward, is that they've added a lot of headcount, and their tax rates went up a little higher. So SEC confirmed that it reached a $500 million Goldman suit. Goldman suit. Notice how I said Goldman suit, not Goldman Sachs. Goldman Sachs. The reason why I'm saying Goldman suit is they sure suited that hand. And whether it's coincidental or ironic as it may seem, is that the FinReg bill was passed yesterday. That settlement was done yesterday. And BP oil cap was taken care of. The only thing that I liked about that news yesterday is that the fish in the ocean aren't going to die anymore. As far as the rest of the crap, is that the Goldman Sachs people are outraged. GE reported Q2 results that beat on the bottom line. BAC, Bank of America, reported Q2 results with EPS beating consensus. Additionally, your BP is pulling back a little bit, 1.3%. The overseas market, they were pretty much flat. Big news is going to be FTSE was up a little bit. The Shanghai was really unchanged. The big news of the day, other than being options expiration, is the Apple suppliers and competitors will be in focus this afternoon as the company holds a press conference with expectations for the company to respond to the iPhone reception problems. Earnings season, as we understand it, is in full swing next week, with hundreds of companies due out with Q2 results. The thing that we had talked about the earnings was that the earnings weren't going to be bad, but that in our view they're going to be in a topping pattern within the last year and a half, from the lower end of the financial crisis there at 2008, and as government was spending your taxpayer dollars, corporate of America has benefited, but Main Street once again remains in the weak category. What we're going to know is that stock sold off early in the day yesterday on mixed economic data, with the downside move acceleration after a much weaker than expected Philly Fed reading, 5.1 versus 10.1 consensus. However, later in the day, like always, the market kind of found a bottom. This is supposed to be, quote, summer rally. And basically every year there's a pattern of where either stocks sell off in the summer rally once they make their move, meaning that within the summer rally structure is that the momentum of summer rally is not nearly as robust as prior summer rallies. So as we measure this summer rally with all of these nice earnings that are coming out, is that we still remain building out positions that come back in line with our profiles that we use here at SMF. And basically, there are several factors that are factored in that. So if you ever want to find out a little bit more about some of our programs that we offer, we probably have at least 100 different style of programs that you can get involved in. We're more diversified in our program management probably than any stock market firm out here. So one of the things that we would like to point out is that not only do you learn the mechanics of the market, however, you get empowered with wisdom that comes from me. And that wisdom is something that people cannot buy. And with the day-to-day trading operations, the day-to-day risk management skills, the day-to-day of walking you through each event is what's going to empower that wisdom. And if you're looking at this video for the first time, I would highly recommend that a lot of people go down a lot of roads. But you're never going to be good in this market, or any market for that matter, unless you walk the road. So, until you walk through at least a good year of earnings and you have the right veteran behind you that's been there, you're never really going to advance as much as you would like to think so. So, nonetheless, this is pre-market, early floor talk about what the general consensus of the public is, which is quite different type of consensus that SMF has. We had some bellwethers. We had that Friday morning, because that's what it is. It's Friday morning at 5:25 a.m. And not only that, let's not forget 716 is the number, 2010. So everyone is wondering why the market's not up 300 points in the futures, because of all of this great settlement news, which people are outraged about, and all of these great earnings out of Intel and Alcoa and other stocks that had reported as well. JP Morgan reported the other day. However, stocks have gone up, they made their highs, and they have key reversals coming down. So a lot of people within Main Street and Wall Street, but particularly Wall Street and some of the bigger funds, are not convinced, obviously, that things are all as rosy as what people want it to be. Otherwise, if it was rosy, you would see the tape, the actual exchange tape, with bid and ask volume at really high levels, and we don't see that.